Everyone is asking the same question right now, and trust me, it's not because the market is calm. Phones are ringing, inboxes are full, and sleep is officially canceled. Gold and silver pulled back, and suddenly, investors who were confident 2 weeks ago are now panicking. Same people, same assets, totally different emotions. Here's the uncomfortable truth most people don't want to hear. Interest in any asset magically appears only after the rally is already over. When silver was quiet and boring, nobody cared. The moment it exploded upward, everyone suddenly became a long-term believer. Classic. So the first thing I ask anyone stuck in gold or silver is very simple. Why did you buy? Not the story you tell yourself now, the real reason back then. If the answer is leverage, tips, or everyone said it's going to double, then the problem isn't the market. The problem was the approach. If you put serious money with heavy leverage, a 40% correction doesn't hurt. It destroys. Trading rules exist for a reason. If they were followed, losses would be uncomfortable, not life-changing. Most people ignored both trading discipline and investment logic, and now they're trapped in between. Now add fuel to the fire. Recent panic didn't come from nowhere. In China, gold-linked institutions collapsed after collecting billions, promising paper gold that didn't actually exist. And when people asked for delivery, there was no gold. Sound familiar? That's exactly why regulators warn about unregulated digital gold and blind trust in brands. So let's zoom out. Gold and silver are assets, not lottery tickets. They work best when they're part of allocation, not obsession. Silver especially. This metal has mood swings, and when it runs like a hero. When it corrects, it reminds you who's boss. A near 45% fall looks scary, but that's silver being silver. And here's what most people miss. Fundamentals didn't break. Industrial demand is still there. Supply is still tight. If silver was truly finished, prices would have collapsed much harder. What actually broke was over-leverage and bad position sizing. Margin hikes simply pushed weak hands out faster. ETFs tell the same story. Premiums vanished during fear, which is exactly why ETF holders feel double pain on corrections. Ironically, that's also when smart money starts accumulating. You don't make extra returns by buying comfort. You make them by buying fear. If someone was comfortable buying silver near the top, but is terrified now after a deep correction, that fear isn't logic, it's emotion. Earlier, silver felt like gold. Now the same silver feels like scrap metal. The asset didn't change. The mindset did. My view is simple. I stay bullish long-term. I buy on dips. Allocation stays controlled around 5%. No drama, no hero trading. Because survival in markets doesn't come from prediction. It comes from discipline. MCX isn't a playground. It's traffic. If you don't know how to ride, an accident isn't unlucky. It's guaranteed. So remember this. Investing is patience. Trading is skill. Leverage is dangerous, and there's no shortcut that skips risk. Gold and silver will reward discipline over time. But without rules, they don't forgive mistakes. That's the real move investors should be watching.